Hello, ladies and gentlemen, and welcome back to a special edition of the markets around the world. Well, $3.2 trillion has just expired in options on the market during the quadruple witching event. Ahead of that, we also have the worst month of the year and the worst time of the year, September into the middle of October. We have key news events coming out across the world, a 200 SMA that usually gets touched during recession or, of course, pullback style periods. And on top of all of this, we have the Federal Reserve having to combat out of control inflation. Between 75 and 100 basis points is expected this week in terms of an interest rate hike. And what that may do is shock the economies around the world more than any of us think. So join us as we go through the key things with the markets right now and how to tell whether this is a bottoming or a new low process, because this is going to be a very important time. Stay tuned, everyone. This will be a good one. Well, welcome back, everybody, to the Daily Show, where we talk about stocks, commodities, and cryptos. If you like markets around the world, remember to subscribe and, of course, smash that like button if you find value in today's video. S&P 500 component correlation. When markets tend to drop, and they drop kind of in a fearful tone, sometimes everybody just goes out and buys the entire basket of all the stocks, not knowing which one is good and which one is bad. When we get these types of readings at a high level, such as what we saw in July, we can start to bring stats together to the market. And this becomes important when we're building a base case scenario. Of course, you can see 2 months later now that we're in this point, the stats were very bearish, and they line up, of course, with what's going on with the market. The market's come up, and of course it's pulled straight back down. But is there more pain to come? Well, there could be. Between 2 and 3 months, the stats are not very good either. But what happens is that 6 to 12 months later, when we've seen these readings, we tend to have a very bullish market. Now, a lot of people will say, well, this time is different. And that's fair. Of course, you go through times. We've never been facing necessarily the most amount of debt with the most amount of course, inflation and runaway control as we've ever seen. The 70s were bad, but of course, this time it is a little different. What isn't different, though, is when you're doing stock selection. If you believe markets have bottomed, if you believe that everything has gone to kind of the lowest levels and the lowest ranges that we'll see, what tends to happen when recoveries go through is tech stocks or growth stocks tend to come out best initially. Now, there are two reasons why this happens. One, of course, tech stocks get hit the worst during a pullback. But on top of that, it's also got to do with growth, and it's got to do with the way that economies recover. So if you notice here, the 6-month and 12-month readings for the Nasdaq compared to the S&P 500 are a little bit more favorable in terms of the Nasdaq. So if you ever believe that the market has bottomed, is the best choice technology? Well, history would say it probably is in terms of recoveries. Let's move over to why we believe these markets were going to drop, and of course, whether there's more pain to come. If we take a look at 1931 to present, we know that, of course, seasonally, midterm election years are worse than others, which is what we're in on top of inflation. But also, we tend to see that kind of run through potential into October in other years and in midterm years. This is kind of the phenomenon that really usually starts around this time and starts to lead into the back end of September, with the worst parts happening usually back end into something like the start of October. So will this happen again? Well, time will tell. We'll have a look at some of the key levels very soon to be thinking whether that's going to happen or not. In terms of bear market recoveries, these are just a great, because since the 1800s kind of data representation. Pause the video if you're interested in those things. And of course, a chart that we've been bringing up all the time, which is correlation. In all of the most correlated markets to the current one, 2015, 1962, 2008, and 73, we've generally seen either a double dipping scenario or we've seen new lows forming with some shocking things to come. And a lot of people are going to be pointing towards this one over here, and rightfully so, because of course there's not much to like about the markets, but you must keep an open mind to both. Midterm election cycles, here's another great chart. If you're interested, pause the video and check that out. So just before we jump into the charts and look at the key levels that you should be watching right now, I'd like to thank the sponsor of today's video, which is Tiger Brokers. And there's a big special offer, especially for our Australian viewers, if you stick around, that they're doing right now. This is the third part of the series, and what I want to talk about was customization. So a lot of platforms do not allow you to customize your layout structure and realistically make a platform that you're enjoying and you like. You can see here in this customized trading layout, I have some different kind of market timers around the world. I have, of course, my orders so I can see them in the system, technical analysis, volume profile, level 1 or level 2 data as possible. I can get my options kind of levels over here if I'm interested, and my watch list and news feeds. Now you can customize this any way you wish, and you can go over here and press some of these buttons and basically open up a toolbox that allows you to add these different tickers. And they're constantly adding new little customized boxes. And then of course you can save those as tabs across the top. And you'll notice I've loaded this one up as FX Evolution. Another great feature that I love about the Tiger Brokers platform is being able to see which particular sector is doing the best for the day. And they have a whole bunch of different concepts around this. Remember, if you want to see what are the most popular stocks, you can go over and check them out. That can be helpful with certain trading strategies and also following those trends that are really on and hot right now. You can also click on the S&P 500, grab the entire S&P 500 stocks. It's so annoying sometimes with some platforms where they don't even let you do this. They say, oh, you have to create market capitalization size and all these other things. Well, how about just allowing me to see the pre-market prices for all of the S&P 500 stocks? Guess what? You can do it easily within the Tiger Brokers platform. And of course, you can create your own watch lists. You can look at the Australian, Singapore, Hong Kong, and all these other markets as well. So if you're interested in finding out more about the special offers down below, no matter where you are in the world, there's a whole bunch down there. And of course, if you aren't focused in one of those countries, you can always contact the Singapore office and see if Tiger Brokers can help you out. Remember, as little as 1 cent today can get you, in Australia anyway, 50 zip stocks. So let's begin our chart discussion by talking about the VIX. And the volatility index is super key when understanding whether markets have bottomed or, of course, are just kind of in the middle of making a move. Now, the tendency towards market bottoming has always been that the VIX will get into capitulation. Effectively, that means the VIX will go past 35 and usually spike into an extreme zone. If you think about the last decade, every time we've usually bottomed in markets, it's been correlated with very high VIXs. This is not something that we have seen during 2022. We haven't seen a reading really even into the 40s yet. And this is making a lot of people very bearish on markets, because one of the things that usually is correlated with these market lows and bottoming processes is a super high VIX. Super fear, not something we've seen in 2022. At the time of this recording, the VIX is in the middle of nowhere land. 26.31 is neither an extreme FOMO or an extreme fear. And you can see the two levels that we generally have up for both of those on these charts. Let's talk about why these markets are going down. A lot of it has to do with runaway inflation and the Fed having to do more work. As we spoke about, there's an expectation that 75% will be what the Fed has to push interest rates to. A lot of people are expecting 100 basis points. And of course, if they do 100 basis points, which I personally doubt they will, but you know, anything's possible. You have to be open to it. If they do that, will the markets then get shocked down? If it's 75 basis points, will the markets instantly rally and then fall later on? These are things that we need to think about. 4.4% is the expectation now for the yield to go to by April of 2023. As we know, if we look at yields and we look at things like the 2-year and other things going around, you'll notice that there are some extremely high levels, and these have generally correlated very poorly with stock market performance moving forward. If we go to the weekly here on the US 2-year, you'll notice it's hit this key zone that I've been looking at for a little while. Have we peaked on the 2-year and then for a little bit of a pullback moving forward? I think this week with the FOMC statement, we'll see a lot of movements here, and you've got to be open to both scenarios with this US 2-year and 10-year. But more importantly, what we should all be looking at together is actually bonds. You can see here high yield bonds. This is kind of the riskier bonds out there. Corporate bonds, very importantly, so companies inside America. And what is happening here is we've seen a series of lower highs being formed as the stock market was making higher high and the stock market was making a recovery. At this stage, we are on point critical for bonds. If bonds fall through this low, what could be to come? Potentially more pain. And we need to be paying attention to things like HYG and other big key bond indices, because the thing about these is, who are you going to trust more? And I want you to put in the comments down below, the people that trade the risk or the market that trades fear and greed. And that's a very interesting concept that is important. We also do know that yields, of course, have risen to a higher level than they have in the past. So realistically, if the market was sicker than it was over here, we should see the bonds already on new lows. That hasn't happened yet, but definitely do be paying attention to it. This is probably the chart that we really felt that was most important for the market week ahead, and that is the US dollar index. Of course, the flight to safety is everything that everybody's talking about right now. Cash, 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 cash. That's all people can say. Swiss franc, US dollar, basically nothing else is safe. We hit the zone that we touched and talked about on the Friday video, and that was to the T. I mean, that thing hit that 110.25 if you want to go back and have a look at it, and it literally just sold straight off. It actually did everything that you'd want to see on the smaller time frames in terms of sold off, recovered, and then sold off again. That's kind of like a tick towards a potential bottoming here, short time frame for the stock markets. But you know what? We're not through it yet. The key will be whether we form a new low underneath 109.28. I would like to see something like this appear this week. And if that happens, there's a real chance that the stock market might have a little bit of a recovery in it before most likely coming down further. Now, of course, if the US dollar does bounce through 110.25, put a closure in, watch out down below, because that'll be like timber for the stock market. And I think we could be looking at a 37.50 very, very quickly, and we'll explain why. But we've got some key levels. We've got down here a break of this, a pullback potential for the US dollar. Watch along and subscribe to the channel, because this will be a super important one. And this is starting to set up across all of these markets. If we go down to the 15-minute euro, you'll notice that the euro took the low. So it moved underneath this zone down here, and then it rallied a little bit harder. In fact, the euro has already pointed towards it wants to go a little bit bullish. So if you were kind of guessing here and looking at the markets, the euro is saying, I want to be a little bit bullish. The US dollar is saying, I've got to go a little bit weaker. This is a good beginning setup here, but notice over in this zone where I've got this 1.0045, this area needs to be cleared by the euro. And I have a feeling that if that does get cleared at the same time, you'll be seeing the US dollar weakening past that 109 point. And at that point, you can say, okay, well, pullbacks or any of those things should be met by sell demand on the US dollar. And that's a potential small bottoming for the stock market as well. This is really key to understand. The US dollar is a super lead here for these markets in some ways. What did gold do? Well, it held that zone barely, but it held it. It held the last big support, or the last puny support that it could have held. It swung that low and it rallied through. That's good news if you're on the short term for gold to the long side. But just remember, if this level is taken again and it goes underneath, unfortunately, there is really not much holding up gold for pretty much another $100 an ounce. And we could really be seeing gold going all the way down into the 1500s. Now, a lot of people would know that I was turning pretty bullish on gold around in this zone last time. And of course, then we turned short-term bearish on it and tried to get bullish on it again here. The problem is going to be that things have changed slightly. Yield has gone out of control. And I'm not here to tell you everything about gold, but what I will say is that gold hates high interest rates. It hates it. And just think about it logically. When you're storing bullion, in a bank, it costs more money if interest rates are higher. Gold is a currency. Never forget that. Gold is one of the oldest currency. And therefore, when you're storing it, you don't really want high interest rates. Gold hates high interest rates. and it doesn't tend to do that well during it. Any recovery here on gold could be met by sell pressure. You'll notice I've got a stacked zone here around that 1700 now. We've got to be looking at it from maybe not the most positive levels, but I do think that with gold, it's all about this zone moving forward, that 1695 to 1700. We'll be following along this week very closely on this one. US oil just hovering around that kind of close on the weekly previously back in the past, and it didn't breach to the new high, activating an inverse head and shoulders. It just came down and it's sitting around this zone. I could see oil doing something like this week where it recovers back to like an 88 and then potentially sells off from that area. But I'm not that strong on oil at this point. I think there's a lot of things to dislike about that chart. Geopolitical tensions, all things. If you want my longer term opinion, yeah, I'm negative on oil. And that's because I think demand destruction is across the board here in economies. You've got shutdowns in China. You've got lockdowns, in other countries as well in some areas. And of course, demand destruction because of the high yields everywhere. Let's move over to the stock market. Tesla holding up very well considering, only down 0.13% on the day. Tesla's kind of stuffing around this key resistance area. If it breaks here, we've got to be careful for the false break. But in general, if we get past that kind of 320, we see something hold above that, it could mean kind of good things for the stock market. Tesla holding up amazingly well in a very tough time, but it's right around that resistance, and you'll want to go and dive down into the smaller timeframes to understand it. You can see how it's rejecting off this area. Very important, that 308 for this week ahead. Apple looks pretty bad on many cases, but of course we did see that kind of resistance become support for Apple near the close. This goes for all of the big tech stocks at the moment. They're all weakening while the market is, relatively speaking, doing pretty well. I do believe Apple is now the most shorted big stock out there, if I'm not mistaken. I think Nvidia has been surpassed by Apple shorters. So this will be an interesting one because what it's doing is it's kind of hit that little level. It's gone underneath here. It's gone to this zone. And a few people are going to try to probably buy it through here. Look at that volume coming through with the big options expiration. Huge amounts of manipulation going into quadruple witching. And while it didn't hit max pain, you can just see the types of manipulation that occur. Big volume. There's a lot of money at stake and things can get pretty wild. Google got that new low in it during the session and then of course bounced up. It didn't quite take what I would have liked it to see, which is getting down underneath that 100 level and then bouncing through. Time will tell whether it can do that. But this is a very weak chart. You look at this and you say, okay, well, maybe there is a recovery in here. But is that recovery met by sellers? Well, let's take a look at some other exhibits. Let's have a look at Microsoft. Would it make sense for Microsoft to get back to this trend line, at least? I think so. You've got resistances, you've got supports, you've got demands and supplies, you've got a lot of different metrics here, a trend line that's coming through, and of course, a new low. This is a major stock in the market, and it is right at that level where we might get a short-term bounce, but if we drop through at least into here, you would think, at least into that kind of 225 or potentially even lower zones here for Microsoft. So it's a lot to say, okay, yeah, we're probably on a little bit of temporary support, and this will go into the S&P 500 and Nasdaq. So let's take a look here at the Nasdaq to start off with. The Nasdaq sold off heavily and then kind of based and recovered near the close of the session. So a lot of things were recovering near the close. If we put this in perspective when we go out to a daily, what you'll notice is that it ends up looking like a little bit of a bullish hammer. And of course, we have this critical zone now where there's that real chance that we buy up into the Federal Reserve's potential 100 basis points. And then what we do in this area is going to be very critical. Will we go up and then sell off, getting us back down into these lows, which I'm sure a lot of you are looking for? Or is it just going to keep selling off? I mean, my guess, based on the structure that we're going to see on the S&P 500, is there's a real potential for a small bounce to be found around this level. We know it's critical. Look at all these wicks. Look at these wicks. Look at these bodies. This area is critical. It held and it bounced and it created small structure. We now know where the resistances are. We know where the problems can be. The S&P 500 is very similar. If we take a look at that, we've got those previous wicks. We've got a lot of bodies through here. And of course, it did bounce. Let's take a look at the futures market though to see how that happens. So over here, we have that last dip low. It came down to that level. It took this first zone. When it took this, we had a bit of problems. We got down to this 38, 35 area and we bounced up. That's pretty important. We know that 39.60 is super critical. So we're going to put a level on that for this week. I just don't think you wouldn't do that. I mean, that's a big, big zone. And then as we scroll down, you'll notice there's that little bit of basing kind of starting to occur on this market. And what it was trying to do was it was trying to fill the gap. And we go back over to the S&P 500 for a second. We'll go down to a 15-minute chart. You'll see it didn't quite do that. Near the end, it tried to do it. It didn't fill this gap. So we've got a gap left here. We've obviously got gaps left behind, but you can really see that 39.60 in all these markets. If this happens, we actually could be looking for a bounce. But for sellers to come back in, they're going to try to sell it in this area here. There's 39.40 kind of to 39.60 zone. You would think that's where sellers are going to try to get recommitted towards this short. And it's consistent with that Nasdaq. It's consistent with these markets realistically everywhere. Have a look here. This is what happened during that session. You'll notice it kind of hovered for a little while, fell off, got a bit wild, big volume during the session actually because of course quadruple witching, and then moved in near the end. 39.60, super critical. And if the markets just keep falling and you miss out, don't feel FOMO, guys. There's always another opportunity in these markets. Just always remember that. Always another opportunity. Where are some next key levels? 37.80 and potentially even this massive one down here, which could happen. 37.50. I would expect demand to come in somewhere in these zones. So if the market does keep falling, structure bases could be formed either here or here. And then of course you could trade them accordingly. So you got to be very careful, but 39.60s making a good case for this week to potentially even see a rally into this area structure. And then will the sellers come back in? We'll find out. If the buyers show full commitment, then we've got to start to say, well, maybe we need to short-term flip towards the bull side. Be flexible and have the patience in this market. That's why we say patience, react, don't predict as much as possible. If we move over to crypto world and we take a look at cryptos in this market during the weekend, they're bouncing off that key zone. This is that little box area that we've liked as a demand level. It's come back into that and it's still structuring through this previous structure. So it's kind of holding as best it can. It sold off that aggressive zone. That was good. We're forming a base here. Is it strong enough? Let's go to the 1 hour. And you'll notice here, it's starting to look a little bit better. The market obviously making a series of lower lows and lower highs. That's now changed slightly. So we went lower high, all the way down. Then all of a sudden we went boom, boom, new higher high, took that, came back down a bit. I'd like to see Bitcoin hold here over the weekend. A new low underneath this, watch out, because that could just mean the market start free falling into potentially the stock market might go to that 37.50 again. And of course, crypto could go and then pressure some serious lows. 17.5 being the big key level. Remember, if Bitcoin gets underneath 17.5, you've got to be open to the idea of 11K. It's going to be brutal. Big alert to be setting around that level. 17.5 is going to be so brutal. Now, a big reason behind that is, of course, what we've discussed in the past to do with halving cycles. The one thing with Bitcoin is I'm not very bullish on it. And in terms of the medium long term. So that's the 6 months to years away just yet. And the reason is got to be what's happened in the past. During these halving cycles, as you can see here with this rainbow chart, it often comes down and then we see kind of like a doubling dip. And when we see that fall off, that secondary fall off, which tends to happen in the next 100 days, that's that one that pushes crypto to a serious level. Remember, there are big players out there that still haven't been fully liquidated. The big boys are now all over crypto. So what would they want to do? If the stock market, and you believe the stock market's going to be weak, let's say you think it's going weak, even a new low potential, then you've got to be open to the idea that crypto could fall through and we could be set between a 9 and 11K BTC. But for people out there that are watching this video and you think that Bitcoin's done and you write it off, I doubt it. I really doubt it. I've seen Bitcoin come back like a phoenix many, many times. And you've just got to always remember the thing about Bitcoin is it does have a value because people's perceptions on it, it's been around, it's now an asset in kind of its bigger play kind of style now. So it will come back, I'm pretty sure, in the future at some point. The question is timing, and timing is everything in these markets. So how will it work? Well, we'll find out in the future. So let's jump over to why this week is so big. And you can see there are big bits of news coming. And when we scroll down here, it'll make a lot of sense. Here it is. The FOMC federal funds rate expected 75 basis points, 3.25%. Remember those charts? They were saying 4.5% pretty much by 2023. So it looks like the Fed may have a lot more to go. Of course, the press conference, the monetary statement, the projections, all of these will be important. The thing is though, this week has so many big banks in it. The Japanese, the Bank of Japan, monetary policy statement coming out. Then we've got, of course, CHF. Then we've got the pound. I mean, it just doesn't get bigger than a week like this from a monetary policy perspective. And of course, what makes the markets move heavily? It's central bank policies. And that's what this week's about. Central bank policies all the way through Wednesday into Thursday. Expect a lot of volatility around there. Practice, of course, patience. And a big shout out, of course, to today's sponsor of the video, Tiger Brokers. If you're from Australia, remember they're offering 50 free zip shares now, up from 20. That's a big increase if you open an account before the end of September and fund it. And I think you can fund it for as little as 1 cent to get some of the bonuses there. So definitely check out the links and the descriptions down below. There's a whole bunch of other special offers. Don't worry for everyone else around the world. But if you're interested, definitely check them out.